Hello, traders. It's 8 a.m. Chicago time on Wednesday, the 16th of September 2020. This is episode number 1838, which was supposed to be yesterday's episode, but yesterday had a lot of problems. Couldn't make it in both technically and traffically. In any case, thanks for joining me today. Thanks for hanging in there. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, allocation is to risk um, pretty much across the board. However, we do have an overall view on the market that is somewhat mixed. So if we look at allocations, we'd see that crude oil's taking a bump higher on shutdown of production due to the hurricane, and then the cables leading. Then comes the Russell, the yen, gold, again approaching 2,000, trading at 1976. And then we get the S&P mini, which is up 14 and a quarter points or 0.42%, but the bonds are up 16 ticks as well. The Bund is up 22 ticks, and the U.S. 10-year note is up 4.5 big ticks, 9 small ticks. DAX down just half a point, really nothing. It's unchanged, and the Euro stock's down 9. And so, to me, looks a little bit mixed-ish, but there is a lean on the risk allocation side, and so that's what we have to go with. Also, when we look at the overall performance, it looks like the market is rallying. The biggest news today is the FOMC rate decision at 2 p.m. Eastern U.S. time, Eastern Daylight Savings Time. And then the Fed conference is at 2:30 p.m. EDT. Overall, the market's perspective is that the Fed's expected to raise economic forecasts, extending a vow to keep rates low. The Federal Reserve is expected to wrap up its latest policy meeting with somewhat rosier economic forecasts, but a renewed pledge to keep interest rates low for as long as the world's biggest economy needs to recover from its deepest downturn in decades. This is also buoyed by FedEx's upbeat results. Of course, FedEx benefits somewhat from the coronavirus issue, as you could imagine, as more things get shipped around to people's homes and to businesses and so on, as people kind of quarantine. Retail stocks in Europe picked up. Chinese stocks have rallied for 3 sessions and broke lower. Japanese stocks ended up higher. Oil prices jumped, as I said, as U.S. offshore rigs are closing due to the hurricane. We have crude oil inventories today, and so on. The dollar is off. The dollar's down 16.5 cents, so gold is going in the opposite direction. So is the yen, euro, and cable. So that's where we are. That's a long way to say, hey, this market is leaning to the positive side. So just be aware. Again, FOMC today. Be smart about what you do. Let's hop right into the review segment. By the way, this morning we did get some economic releases. The inflation rate out of Great Britain came in higher at 0.2 versus 0.1. Inflation rate out of Canada year on year came in weaker at 0.1 versus 0.3. Retail sales came in weaker month on month, 0.6 versus 1%. And then at 9 o'clock Central, 10 Eastern, we get NAHB Housing Market Index, business inventories. At 10:30 Eastern, we get the crude inventories. And again, as I said, the Fed rate decision is the governing factor, and that's at 2 with the conference at 2:30. And we still get net tick flows, investment inflows. at 4 p.m. So relatively busy day, and just keep your powder dry. Make sure that you're prepared to handle. You have the credit to handle the volatility if you want to trade it after the Fed announcement. So let's take a look at what was expected yesterday. I didn't do a trader bite, but I did post. I did post this at about 7 minutes after the open, and the primary scenario is I expected the market to dip back towards the 92 area. Actually, the 95 right here. Was looking for a dip towards the 95 and then a rally to take out that 14 and splash up. I was looking for a quick splash above the 14, looking for stops to be taken out on this double top back here, week high. That was the primary scenario. The secondary is if we take out the overnight high yesterday was 34.06 and a quarter. If we take out the overnight high, I expect a response and a drop to 95 as well. And then I expected the market to kind of sit sideways somewhere around the 3,400 mark, and that 3,400 continuing to give us chop as it's a major figure in the December contract. Okay, so scenario two was on point. We did push up above the overnight high. We looked for responsive selling to 95 and then looked for it to sit sideways, except the afternoon brought in a little bit more excitement. So here it is. Let me kill these stock zones and master levels. So here it is. This is the action. We opened up. We pushed through that overnight high from the yesterday at 34.06 quarter. So that's exactly right. And then we looked for a push down, an impulse down, really. Not much of an impulse here, but to look for a push down, and then we're targeting 95, the 95.75 area pushed to 94.50. So we're on point with scenario two here, and then the expectations would push back up to 3,400 and go sideways from there. And it did do that. It did do that throughout the afternoon until about noon. And then noon, it started to sell off. And the sell off was looking, if we did sell off, then we're going to look for the 92, 93 area, bounce at 93 back to the IB right here. And we started to create this channel, right? So there's one point for the main point for the trend line, the connecting point for the trend line, and then because it was consolidating between, and I remarked on this in the Convergent chat room, because it was consolidating between that IB low and the prior day's high, and it's not rejecting the prior day's high from 93 back up through 3,400 and push higher. What I was looking for is a continuation to the prior day's point of control. Prior day's point of control right here. This pink line right here at 85.50. So I was looking for a push down there. And what does it do? It goes right to 85.75, rotates, and then puts in just a beautiful zipper. Look at these zippers. These are just tremendous structures here. It puts in a beautiful zipper, and then it continues even lower. The next level down was 75. Went to 78.50. So we have a zipper, we have a trend line here, and anyway, I know hindsight's always 20/20, and I know it's easy for me to come on here and talk after the fact, but I hope that you're seeing that there is a plan in place, and the goal is to see if the market will align itself with the plan. Which, which card does it want to play today? The market can play an infinite number of cards, but I go with 5 scenarios, 4 or 5 scenarios, and when the market starts to show, I look to press those scenarios. and I'm prepared to do that. And that's what this planning, what the trader bite's all about. So once we push down into the lower distribution here, the lower distribution, because the prior day had two distributions. Once we push into the lower distribution, we get rejection. We break this trend line and we push right back up to the prior day's high. Small pullback. We're in the zipper now, and it basically gets interrupted with the close. So we end up finishing at the overnight point of control yesterday, in what looks to me like a V bottom or another situation where we're buying the dip. Now, one thing I want to show here, got too much stuff up. One thing I want to show, let me just get rid of these bands here. One thing, oh, let me just add another one, sorry. Oop. Okay. One thing I want to show here is just be cautious as we are, we have dipped into the 50 SMA and we have bounced up, and with the bounce, we're really finishing above the prior day's range consistently. We keep finishing above the prior day's range again and again and again, and we're forming what looks like this. As I said before, we had an impulse down. We put in an all-time high. Remember, these are December prices, so the December high is 35.7675, the all-time high. We've impulsed down, pulled back, higher, lower low. We extended it, and now we're in a corrective phase, and we are likely on our way back higher. And so just be careful here with the short side. I would not overstay the shorts. It's bounced off of some key areas, and we still have this MC point of control beneath us that we are leaning on. The 60, the 3360 is actually beneath us, and the market's kind of moving away from it. Just remember that these are really important ideas that now that we've broken the double top in the overnight session, we are likely to start filling in these thin areas above. So let's take a look at that. What has it done overnight? Remember, the blue profile here represents the day session, which is shaded gray, dark gray, and then the orange profile is the full session. And if we look at what it did yesterday, it opened, it dipped back down to 85 and a quarter, higher low, it pushed back up, and we still had that 34.14 right up here. What we did is we walked to the 34.14, very small pullback, and we exploded upwards, and that was basically scenario one. If you recall, scenario one was looking for it to go to 34.14 right here, pull back, and then break through to maybe 18 or 20 or to about 20 before it continues higher. So that's what we're getting now. It is staying ahead of its mid, staying ahead of its VWAP, and we have a point of control that is higher than the prior day's point of control. The market's accepting these higher prices as we open up. If it does not immediately sell off, then we're likely to drift up into the Fed announcement. This is important to note. Volume's pretty good, 214, and we are in the rollover. So don't forget that we're in the middle of the rollover, and the pace of the roll shows that probably at some point today we will have pretty much completed the entire roll. I'll show you that here in a second. It takes forever to load. I'll show you that in a second, that we can start with today's trading. We can probably start to look at the delta and act accordingly. So here's the roll, the pace of the roll. Important to note, the roll is expected to go to about 78% of the open interest rolling from September to December. The roll is ahead of itself a little bit. I know this is yellow on white, but squint your eyes and see. I don't want to change the color just yet. The roll is ahead of itself, and now it's likely to peter out and finish. I would say starting today, we can rely on the delta and the volume, that much of the business to do with the roll is done. We still have the issue of options on futures needing hedging, having a delta exposure, gamma exposure, and futures will be used to control some of that risk. So we still have some activity, some heavier volume probably coming in until and through Friday. But overall, the delta is going to be meaningful going forward. Okay, so that's that. I'm going to step right into what's expected for today, spend 2 minutes of that on that, and then let you all run. So let's take a look at what we're expecting for today. What's the plan? What's the plan, man? So this morning we've stepped out of the prior day's range. Again, we took out the 14, we pushed the 18 quarter. We're trading against VWAP right now. The point of control is above us. My expectation here, with the overnight inventory being mostly long, my expectation here is it's likely to butt its head against the 34.09, potentially push to 14, and then have a pullback towards yesterday's point of control and potentially 3,400 with chop in the middle before it starts to rise and squeeze the overnight high. The overnight low is down here at 33.85 and a quarter, so the overnight stat is looking like it's 34.18 is the easier path. So I'm looking for that to happen, and then we get the FOMC. I'm not going to have high expectations for rotations or trend until the FOMC comes out, and at that point, we don't know which way it's likely to go. Most likely up, as it often does with the FOMC, because they're going to paint a rosy picture coming in. The secondary scenario is one where we continue to move down. We're likely to consolidate around the 3,400 here, dip down below, potentially into the 95, 93 area, impulse up, consolidate, and then start walking ourselves back up also into the FOMC. And then you have the same idea here for scenario 2. I'm not expecting wide range. We don't usually get wide ranges before the FOMC. I'm looking at probably 18 points or so of range, statistically speaking, according to the latest rotations. And ranges looking for 18 points to the FOMC. And then it does what it does. If we do get some selling, like an open test up, drive down, that would create a very, very interesting scenario. 78.50 becomes important because that marks the one-time framing, the one-time framing low. That's the price that needs to hold in order for it to continue higher. The one-time framing to remain intact. So if we do push lower, it's really important to keep an eye on how it responds to this 78.50 area. Becomes pretty important. Okay, but most likely we're likely to rotate higher and push. Rotate higher and into the FOMC, and then, given that everything's been priced in, don't be surprised if we end up around the open, if not just slightly below it or something like that, by the time the day is done. So, the FOMC, we've marked it in the past, and it's just the market tends to go to that scene of the crime pretty quickly. Anyway, I'll let you get out of here. Good luck today, and I'll catch you tomorrow. Let me know what you think. Take care.